everyone. Let's put the live stream up of the algo. We can watch the last 10 minutes or so of the close. And we're going to review the day. We're looking primarily at this time frame here. Don't have to worry too much about this one. But over here we got the 80 tick, which gives us the bigger picture. And you can see the bigger picture is clearly lower. Whew, what a day. What a day. So yeah, in just a minute we're going to do a review. I don't usually trade the last 30 minutes, let alone the last 10 minutes, but we've got MLC coming in right now. And I would expect we close at the lows, but we're pretty deep in the pit here. Way too late to short. Way too late to short. But we're gonna review the day, and then we're gonna take a look at how you might have determined that this was not a good day to be long, and how you might want to adjust your trading rules based on the conditions. So that's what we're going to look at. So let's just let it close because it's hard to review a day when the price is moving. Everyone wants to know where we close, so we'll watch it. I'll call it out if we get it set up. This is technically an okay setup because you had a purple bar followed by a blue diamond, but those only work when you have previous support there, and technically there was. This is what Simon calls a trap back in. That purple bar followed by a diamond is pretty good, but longs have not been working well, so I wouldn't blame anybody for skipping it. Not to mention it's the end of the day, and on trend days we tend to close. Trend day down, we tend to close to lows. So I don't think there's anything wrong with not taking that, but it technically was valid. For any of you who are here from the Trading Performer, you'll see that my colors and chart is quite a bit more busy than Simon's. Some of these are my own ideas, like the big vertical red and green lines here, and then the background, the purple and pink. I'll explain those when we do the review. There's a couple other. The diamonds are also totally different in my setup. And the great thing about having the algo on my desktop means that I can do all the back testing I want, but the bad news about that is that the more back testing I do, the more ideas I come up with, and I end up, spending a lot of time coding and back testing new ideas, and so hopefully it's helpful to see what I'm doing. But I would, for those of you who are using some sort of a objective trading process, which I hope is most of you. Doesn't have to be this one. But if you have some way to decide how you get into a trade that you can, pull up any chart and point to, like, okay, here's the trigger to get long because of this objective, observable evidence. If you're doing that, you need to know when that specific objective, measurable setup works the best, and what conditions it works the least often. And that is something that if I think the number one thing to do is if you can't, like, if you have, it's okay if you don't know how to program, right? But if you can't break down your setups into something where you could objectively show me, like you could give someone in very simple language, when this happens, I do this, and then that person could go and find that and be like, you mean like this? And then they'd say yes, right? If you don't have a way to do that, if instead it's just like, I watch the order flow and when it looks bullish, I buy it, right? But you don't have anything objective. Without that, it's really hard to be consistent because there's so much else to watch besides just the price. And I realize that all the cliches about only price matters and all that stuff, and that's true. But if you're not keeping track of what's happening on like a bigger picture, for instance, or where we are on compared to previous levels or the profile and stuff like that, like you're missing a big picture if all you're seeing is, the DOM. Yeah, you're missing out on a lot of important nuance. So we got 6 more minutes here. I don't know if we're gonna close the lows or not. So the beeping just means that actually shouldn't be happening. Where is that? I've got something. So what it's supposed to do is tell me when we're outside the range. Oh, it's probably on ES. Nope, not there. Those levels aren't right. So we're actually getting a little bit of a lift. One of these must have something not quite right set up on it. Because it's only supposed to beep when this when the bars get outside of my radar channel here, the blue lines. It beeps to let me know that there might be a reversion trade setting up. It's not a trade entry. The beep is not a trade entry. It's actually to get me oriented to the fact that a trade reversion scalp might be coming up. It's not a sign that like the trend is reversing or anything like that. It's just letting me know that we're extended, and then what I have to do is I have to observe conditions and decide if I want to trade mean reversion or if I want to trade momentum. I have it in audible beep because on the days where we are choppy and we're not moving a lot, like yesterday afternoon, I should say. On those days, I end up spending so much mental capital just staring at the chart while like price literally does this, right? And I'm like trying to like analyze all these signals when really I'm only interested in trades that occur out here. Yeah, see, it shouldn't be beeping here. So it must be a smaller time frame. What time frame is outside? I'm not sure which one it is. It shouldn't be beeping. Like I said, all I can think of is it might be ES. And I accidentally, let me just make sure it's not the 16 tick. Hold on real quick, because that's going to annoy me. Here, I can do this down here so you guys don't have to worry about it. Outside. Okay, that one's off. It's not the 16 tick. I'm not sure. It would be normal for it to beep in a minute because... Oh, I wonder, is it this one? It might be this one. Nope. Not ES. Okay. And I know it's not this. Well, it shouldn't be. Oh, could it be the 30 tick? No. I wonder if I was messing with this. Hold on. It hasn't been outside of the range. That's not it. No idea. But see, now it's going to beep if this closes, and that would be... It should be beeping now. It's got to get a certain percentage out of there. And it'll alert me that if I think it's balanced, I might want to... Or bearish, that I might want to be looking for a short. We'll see if it triggers. Here this is another sign that it might be a short. If this pink, see how it went dark and then light and now it's black. There's the deep beep. So okay, so if this printed lower and this light pink disappeared, the potential for a mean reversion trade's there. You still need a trigger. But what that pink is basically telling me is don't short until the pink goes away. It says traders are rushing to get long, and the potential's there for them to be exhausted, but I don't want to be the first one in line when they exhaust. I want to react to the lack of interest up there. I don't want to be the one that shorts the top. I have no interest whatsoever of being the one that shorts up here. Now this short is good. See that? It's too late in the day for me to take it. There's only 2 minutes left, but this short is good. This orange bar, if you're bearish, remember it beeped, right, to let me know, and then the pink went away. We had divergence, which is what that stair step is. Doesn't matter on the color. It's just I measure a couple different things. You can see those themselves are not always signs of weakness, right? It's just divergence. It just means that like if you've been waiting for the market to settle down, like if you've got a lot pressure coming into the upside and you know it's going to exhaust pretty soon, you really want to see as much divergence as possible before you commit to a turnaround. So like here, there was no divergence. It's going to be really hard to push it down without, without some kind of divergence after, if it's balanced or bullish. The thing I would really want to focus on today, because I think it's just seeing people in the room and in the Trade and Perform room and talking to some traders on Twitter and stuff like that, is that days like this do not have to be painful if you have a process for determining what type of trades you can take depending on the conditions. There we go. And some of the very best traders actually just specialize in one type of condition. So, for instance, Simon, my coach, specializes in balanced markets. It's not doesn't mean he can't trade anything else, right? But he's really good at fast rotating markets, right? Like anything I could find today that looks like that. But what he's really good at is the really fast, volatile, moving back and forth. Like if this kind of action, what we see right here, he's got his system works really well for that. You can see that I mentioned earlier, purple bar diamond is a pretty good long in those conditions. And then now if pink bar star was up here, it'd be better. That's technically a short, but it's not really, you don't have a lot of risk reward because it's inside of the radar here. It's not outside of that blue line, right? We really want to get that bar, this bar here, or maybe the pink bar here, even better, up here somewhere. So we actually, because our target is back into the lows of this area between the dotted line and the blue line is where we want to get the market. When we're trading mean reversion, we're basically targeting this for our shorts, and we're targeting this for our longs, right? So if you're going to get short here, thinking it's mean reversion, you're exiting like into this, right? So your risk is on the top of the turn, right? And so here you don't have very good risk reward to take the trade, but here your risk reward is much better. See that? And once again, that one hits target. So you could go long. I'd probably skip this one. I'd skip this one. We're not far enough away. Again, purple bar star, but you can see that we're not far enough away. So here, if you got long here, you'd be exiting into this and then maybe letting a runner go. But it's too high for me. This gray line is the midpoint of the channel, what he calls the TNP radar, right? And that midpoint, you really, if you're trading mean reversion, your long entry should be under that, and your short entries should be above it all the time. If you're trading his mean reversion system, that's just the way it should work. So in that sense, you miss this move, but you could still be long from here, right? That one never really stopped out. On runners, I mean, you would have been long here. You're taking profits on this pink bar, but then you could hold runners with your stop below this bar at the lows, and then you could take profits up into this or up into this as we cross that blue line, because that's usually where you're going to get exhaustion if it's mean reversion. And then this is, like I said, a pretty good short because you trap back into this one, which had a pink bar. We traded above it. When I say trap back in, I mean like we came back through this. See that? It's close enough. And then for me, I know it is because the pink disappears, and I get an algo, the orange, to signal me in for a mean reversion trade. And then here you have purple bar, blue diamond. This one did not get underneath the radar at all. See that? So technically this is not good enough. Unless you are bullish, then it can be a pullback buy if you think you're making higher highs and higher lows, which we're not. I mean, we are right here on this time frame, but not a lot. You want to be looking at a higher time frame than the one you're trading, and making sure that you're trading with that. That's really the key to momentum. But here you'd be getting out of your short if you were balanced here, balanced or neutral or bearish, right? You'd be short here and then targeting this area between the purple and the blue, and so that occurs right here. See how they come in, and especially if it's a purple bar that's entering that area, you're just out, right? Most of it. Like I'm okay. Like it depends on what kind of account you're trading. I've been doing these Apex trading prop account evaluations. And because right now they're doing an 80% sale again. If you guys want the coupon code, go to my Twitter. And it goes till tonight. But with those evals, and then for the funded accounts too, once you pass the evals, until you've built a cushion, you need to have a place just to take profits, and then you don't really want to keep very many runners, because if those runners run back on you, it counts against you as if you didn't make the profit. Like, it's your P&L might be zero, right? If, like, let's say you sold 2 here, just simplify it, right? Sold 2 there, got out 1 here, and it comes all the way back and stops you out. Your P&L at break even, your P&L looks like 0. So you're like, oh, okay, like that's all right. I took a shot, it was free. But if you're trading in those prop accounts, if you're shorting here with 2, and then getting out here with 1, and then the other one comes back and goes red on you, or even if you just bring it back to break even, you're actually negative on that account, because the drawdown is from your high water mark. So if this was your first trade of the day, right, and you brought it down here, you just gotta exit that. And it's a hard thing to adjust to for those of us who aren't used to that type of style of just like getting a trade, exiting, getting a trade and exiting. But that is how you qualify those. Now, what's nice about Apex is that once you qualify it and you build a cushion of whatever your goal was, the profit goal was for your evaluation. If you have a funded account, let's say for the $25,000 account, the profit goal is $1,500. And so once you've built a $1,500 cushion in that that funded account, the trailing drawdown pauses there. So if you then make another $1,500, right, and lose it, you don't lose the account. You just go back to 0. Or well, you'd be up $1,500 still, but your trailing drawdown would like stay right there, right? Because you made $2,500, the trailing drawdown pauses. Then if you made another, let's say $300, trailing drawdown would still lose $1,500 from $1,500. You'd have to take the account literally back to 0. You'd have to give back all your profits, in other words, all of them, before you'd lose the account. So it's a little different. Like I said, it's better with the funded account. But when you're qualifying it, rather than like building a cushion, once you get that $1,500, you just qualify the account. And then you have to, you're trading sim in the evaluation, so you have to start over and trade in real money. But anyway, I don't know why I got on that tangent, but I know, because it's you have to then adjust once you qualify the account and you've built that cushion. That, like, whatever, it depends on what your size is. You can see the website for all that. But once you built that cushion, now you can hold that runner and it doesn't hurt you, right? But if you haven't built that cushion in your funded account, or you're still qualifying the account, or maybe you're qualifying a second account, or third or fourth or fifth, you can have 10. Then you want to just take profits in here, right? Which is like a expected range move in a neutral market. So anyway, let's back up. Let's do the actual trades review. I really want to focus on how different it was overnight before CPI hit, like pre-CPI, right? All like what people refer to as noise, right? The algo trading, where algos are just kind of like passing the football back and forth, and how that changes when you get momentum in the market. And keep in mind, all momentum is, you guys, it's just traders that are trapped, right? So traders that are trapped produces momentum, and that momentum it expresses itself as speed and volume. So if you have price moving in bigger ranges, expanding ranges on increasing volume, you're likely looking at the result of trapped traders rushing to get out of their trade, right? And that is like the definition, basically, of what momentum looks like on a chart, especially a Renko chart. It's really obvious on the Renko chart. So this is when CPI hit. And what I'm hoping to show you guys is that before CPI, when things are relatively calm, but yet like moving, right? Obviously when it's like chopping inside the range, which there's just nothing to do. But when it's like here, like this is pretty hard. You can't really trade this, in my opinion. And that's why we use this radar, because it's like you can just see that there's nothing to really do here, unless you want to short these. But what you'll see is that the mean reversion trades like similar to the ones that Simon uses and teaches, but also some of the ones that I've developed myself and have taught on these before. They're going to work way better when you have this kind. Again, this is way too tight from a hyper reference, right? I want to get these bars outside of these blue lines to really have positive risk reward. But even without that happening, you're still going to see. Let's see. Whoops, I was 1 hour late. Here's CPI. So you're still going to see that the mean reversion trades will work here. This is what you want. So see how even yesterday, even if we go all the way back, I'm not going to do a full review of yesterday too. I was on vacation. I didn't actually watch a trade. I will eventually review them because I take back testing data in a spreadsheet so that I know whether or not we're like shifting and what trades are working and what aren't in certain conditions. But what I want you to show you is that, just real quick, is that the like, let me see where this starts. Hold on. So I mean, this is a good enough example. So see how here we have the signals I was saying before, right? So there's I know it's a lot to look at, but there's basically 4 trades, but there's like variations on those trades, right? So what we're basically looking for is, first of all, bars going in the opposite direction, right? Because we're looking at mean reversion trades during balance. We're looking for bars that go in opposite direction, right? Following, outside of these bars, or at least touching the blue, outside of these lines, sorry, or at least touching the blue one, right? So for instance, this and this is okay if it was a setup, right? That's far enough away. This is okay because it's going beyond it. This is better. This, on the other hand, not good enough. See how that one did not get beyond this blue line? So what I'm trying to get across here is that when the market is doing this and it's staying above this midpoint, not all the time, obviously it can test below it, but if you really want to look at the volume, the yellow line, if the yellow line can stay in general above this gray midpoint, you can assume we have momentum in the market and you want to stop trading mean reversion for the time being. And that will mean that you will miss some moves, but it also means that you're not going to get run over. And you'll see that the uptrend here didn't last, right? So you might have missed this had you seen this and thought, okay, that looks pretty bullish, I'm just going to hold off. But you're not getting faked out at all in here, certainly. You know this is bullish, right? But this one you might miss if you decided that was a sign of some bull momentum, which it technically was. But once you see mean reversion trades working like that, right? You're getting from one side of the channel to the other side of the channel, or from one blue line to the other blue line. And especially once these lines start to flatten out, they don't have to be exactly flat, but they're not any more than like 45 degrees. This is like as steep as you want it. You can also look down here at these indicators. I'm not going to explain how they all work, but they influence like some of the other signals, and I'm still trying to kind of observe to see if I'm missing something. But basically, when these are on their extremes, right, or like the orange is like way up here near the red, or way down here near this red, right? See how that one can't reach the red, but this orange came all the way up to the red. So when you're hitting the extremes, and it doesn't look like it's balanced, what you'll usually see is it'll come back and it'll bounce off the midpoint. Here, I'll show you right here. It'll do it here, I bet. So, all right. So see how you have extremes down on the orange, right? Comes up, then it gets to extreme up on the orange, comes back down, and it can't even get under this green line. And this green area here, I'm considering the middle, right? There's like fractals of it. There's the red in the very inside, and then when market is a little bit more volatile, it's green, and then when market's really volatile, it gets outside of red.
So here we got outside of red, very volatile, right? One-sided market expected. We get this V, we get this nice reversal. There's certain when this is going on, right? There's certain setups that I'm using that I would not be using when I see this staying inside of the red, right? Here we got really close to the red, right? But it didn't quite cross it, see? So I'm still considering mean reversion here. But here, when it goes vroom, way down there, this happens to be exhaustion, right? So the only reason mean reversion works here, and it did, right? We did get, you can see purple on the background followed by a positive bar when it stops with an algo, the green or the white, either one, signaled along. But notice like here, that didn't really work very well. It's just a green bar. It's not a very strong algo. It's an algo on a different time frame, but not this one. But you can see here there was no exhaustion behind that, right? Yet this is not balance. It's like, see how this is inside here? So that should be balanced, but look at the market. Look at price. Not balanced, right? It looks balanced primarily because there's little volume and because we went so far on this open, right? That gap was so big. And so when we came back, it looks like balance, but it's on this indicator it looks like balance, but it's just Sunday night trading, right? Just algos passing the ball back and forth. And so the balance is going to be volatile, and then there's the exhaustion point. And so now all of a sudden the bullish trades will work, even though we're not really balanced. It's more bullish there, right? And now that we've gotten it, it doesn't quite reach it, but technically, like you can see how these almost make it above the red. So it's close enough for hand grenades. But once you've gotten this going, and you get this pullback into here, you would expect momentum trades to start to work, which is what this is. And then, but you can see it didn't continue, right? Like this one's really close to. So I guess if you took this one, you're probably thinking this is still bullish. And that's why I said you might miss some of these pullbacks, right? Because you'd still think it's bullish here. And then you'd be looking for signals on the midpoint, which just didn't occur. It went right through it. And so now we should be expecting this to go back into balance, right? And now we're looking for extremes, extreme lows to get high, to get long, extreme highs to get short. But we need that response by the algo. Okay, so this one, purple bar, followed by an algo would have been an entry, but there's no algo here. It's just a green bar. So this one just gets missed. Technically, Simon has an entry for that, which is a diamond. I'm not using that personally. Not because I don't think it works. I've got enough signals. So I don't really have a signal here. It's interesting that this purple didn't continue down here. It ended so early. That might be relevant. I don't know yet. That's a new idea. But then again, like here, you're clearly see how. Okay, so here you got underneath it, right? Look pretty bearish here. So there'd be a reason to think that we are bearish to neutral and probably no longer bullish. But then we come back up and we just hang around in the midpoint. See that? So all through here, it's just balance. There's not a lot of momentum in the market. So if just the diamond by itself isn't good enough, but the diamond coming back, see how we tested above this level, and then we close below it, and we're outside of the blue, and we think it's at least neutral if not bearish, makes that an okay trade. But you can see that it sets up here. So not, it looks pretty balanced. Oh, here, we came up on this one. I didn't see this. See how this one spiked up so high? That's where the momentum was. Came back in. That would be when it turns pink at the midpoint with the algo, that would be your momentum buy. So again, it's not a great example because this isn't that bullish. But what we're going to see is today, during the regular trading session, those kind of setups happened a lot. These pullbacks into midpoint. And the other way you can take these trades, if you think it's really bullish, find a triangle going in the direction that you want to take the trade, like this, and then look for a pullback into or under that. especially if it's pink, and then a response with an algo at that level. If you think it's bullish, that's going to work. If it's bearish, it's going to work in the opposite direction. You'll see it work over and over again today. Not a trade that Simon teaches because it's a momentum trade and it's only going to work in certain conditions. But if you can determine that it's bearish or bullish clearly on the chart, then you can take those trades pretty consistently. You can see now this would be a short, right? And that one stops out. The sells are always harder than the buys. This did get a little on the high side, but here you're back into neutral. So normally I would go ahead and take that. I might take this one too. And that one also stops, right? And it just gets bullish again. Now it clearly is not to be messed with, right? So that's kind of how that lower one works. But anyway, these are just two stops. If you think this is balanced, but this was your key, that this was your clue that it might not be, is that a bullish momentum trade worked, right? So once the bullish momentum trades start to work, you might want to calm down on the shorts, especially since it often takes multiple tries to get the short right. They just love to fuck with shorts, right? And so like there's no trade here, it's red, right? It's yeah, there's just nothing to do here. But here, if you're bearish or neutral, the pink goes away. So that would be a potential trade, but there's no algo here. So I wouldn't take it. This is better, but still not a real setup other than just being outside of the range. And see how they just chop it at you? It just takes so much patience and consistency to get these right. This one's another potential entry. Right? It's not great, but it works. And so you would have, yeah. And then here we start to see it's creeping down there, right? And now see how the orange can't get back up above this like pinkish area, and turns right around. Pretty good sign that it's going to get bearish here, right? The next push is probably going to go under this red line. Almost does, comes back in. So I normally would not take this because I would expect it to go a little bit lower. And like I said, that's going to result in missing some trades. These green background lines here are kind of confirmations that if you're in neutral and they occur underneath the radar, the blue lines are above the blue lines for red ones, that if it's also a trade entry that I already have, it's a confirmation. Either I can take bigger size or I can just be a little more confident that it's an important level based on the momentum. So this one isn't actually a trade entry. It's just a pink bar. It would need a star or a diamond or be green on the inside for me to take it. And this one is also not really anything. It's just the green outline. There's no entry in here. So I mean, if you're going to take these green outline trades, you'd have to take both of them, right? But I don't have a reason to think that this one would work more than this one, other than the fact that it's completely outside of the radar. So the mean reversion trade might work better. But it looks pretty bearish when this fails. But anyway, so like here again, right? Pink bar, orange bar, pretty good short, gets stopped out. Pink bar star, even better short, that one works. Right, and you can see here we're not going above the red line. There's really no reason to think that this is super bullish. It's probably neutral or bearish, right? And then it gives you a nice push down. So anyway, let's go to today. I just want to show you that those work pretty well. Not every time, right? 70% of the time, especially the long side, those are going to work a lot. Okay, so here is the morning. And what you're going to see is we have a similar situation here. Pink bar, diamond gets you a nice little push, right? This one touches the blue line, but there's no purple bar here, so it's not good enough. Purple bar, diamond. This one doesn't quite touch the line, so I probably would have skipped it. I wasn't trading it midnight, but this one I probably missed. But you see how that's got the green background, the green line in the background? It's confirming that, like, if this is a good spot to enter, if you like the location, you have momentum on your side there. Similar to the pink background, this darker pink here especially. If that occurs right at a entry, again, it's not like you just long every time it's pink in the background. It's not that easy, unfortunately. But you can say that you don't want to be short until that goes away, right? So this is just not a known entry. But if it was, it would be an okay place to enter. The orange bar is an entry I use. right? And the pink stop, so that's an okay one for mean reversion trade. This one actually doesn't hit the target here, just misses it, which just kind of sucks. Sometimes that happens. Okay, so pink bar, orange bar outside of the radar comes down. See how it gets stuck? So in both of these trades, you'd take some risk off at like 12 to 15 points, so you get your 1-1. But the trailer that you're trying to get like 20 plus points on doesn't follow up, right? But that's okay. That you got most of your risk off the trade, and eventually those work. But here, see how the yellow line can't get underneath the midpoint, but yet price snuck under it and then came right back with strength, right there, right? And then you look here, we couldn't get the orange underneath the red line. It's not bearish, and you can even see with the radar it's starting to pick up. So this is the first sign that there might be some bullish momentum here. It's not a trade entry for me in this case because there's no purple bar here. It's a 3-bar entry. It's pretty risky. But it's certainly, for me, a sign to not be aggressive on shorts. So this would technically be my first mean reversion short. I would probably skip it. Let me see if that's right. Yeah, see how it can't get over this midpoint? I would rather take this long than this short. Even though, like I said, this is going against a little bit, like I'm not saying that like trading mean reversion is wrong, right? It usually works, but you need to know when it stops working. And so that's why I'm using these indicators to know when it might stop working. And so once I see this kind of this working out to the upside, and then it comes back down and it bounces out that midpoint again, I'm just not going to short it. I personally can't handle the constant losses of fighting that trend. And so I'd rather take a small entry for momentum here to the long side and not even worry about the short. But in this case, the timing works out that CPI came out and it actually triggered short, pink bar, orange bar, right? And so with the rules I just said, where we're too bullish to short, you'd miss this huge move, right? And if that's going to tilt you, then you're just going to have to take every single one. There's no way around that. Either you're going to take more stops, and or you're going to because for me, this is just way too far to even think about shorting. But for my coach, he sees it the opposite way. He sees this as we rarely get up here this far away from the blue line. So most of the time, the price is usually going to come back to at least the midpoint. So he'll just take this trade, take half off here. And I don't think that's wrong. It's just not the way I'm doing things because I'm trying to balance a mean reversion technique with a momentum technique, right? So if you just pick one, your job is a lot easier. You get these trades pretty much all the time, but you're also taking this, getting some of your risk off and getting stopped, and this one you might have kind of the same situation, right? So you need to be okay with taking a short, taking some profit, getting your runner stopped out, taking a short, taking some profit, getting your runner stopped out, and not be afraid to take this one. Personally, that's really been tough for me, right? I end up taking this one, getting stopped out on the runners, thinking that's okay, there's runners. I do it again, and I get this momentum signal, and I'm like, fuck, I better get out of this. This is getting really bullish. And then when this one comes, I'm like, the last one didn't work. Why is this one going to work? And then I skip the really good one that actually pays, right? So if that's you, in my opinion, the solution is accept that you're going to miss these, but add in some momentum trades to pay you back for the times you miss this, and then accept also that you're going to miss out on these runners getting stopped out. And when you're trading these prop accounts with a trailing drawdown, like with Apex, taking these runners, these stops on runners, it chops you down, right? Because your high watermark is like here, and then you give that half back, and now you're basically back to zero on the account. Even though your profit and loss is good, your P&L looks good, but based on the trailing drawdown, it's like you haven't even traded. And then you do it again, and you take most of your profit here, half of it comes off. You look like you haven't lost anything, but with the trailing drawdown, you're actually down like a half stop, right? And then if you miss this big move, it's like, fuck, what am I doing, right? So that's the challenge. So I wouldn't trade CPI no matter what. Like this happens within like a blink of an eye, right? Seconds. So I'm not even gonna worry about this. You can see they're gapping like crazy, right? But what I will notice right away is that we've gone from printing only pink. See how this has been pink on the background? Like not all the time, but we're only getting these pink signals. We're not getting any purple signals at all. See that? Like the only thing we're seeing is buyers. It changes color here because it went to overnight. But look how it has. This is the last time it was purple. This is the last time that sellers even had any momentum, and this one wasn't even on a down bar. So like this was the last wave that really. So watch this. So this here is the last time, let's say the lowest time that bears were in control of the ball, right? They were in control of price. This was your ideal entry, right? How you would know to take that rather than this, we already talked about that. That's kind of like fantasy land, right? If you're gonna, the only way to get long this is to basically wait for the better signal, like the diamond, and you know, skip just the signal, the single signal, the ending the purple background signal, skipping that. But then when you get the green confirmation and an algo signal and the purple ending, and turning black, then that might be a good time to consider a long, right? So that's the only way you'd really get that, unless you've been trading every single long there. But notice this is the last wave. And when I say wave, I'm talking about these gray waves here. Let me get rid of that line. These gray waves here are the cumulative volume waves, or the Weiss waves, right? And that's that wave to the downside here. So what we can do is we can draw a DVP on this. So we're going to draw a volume profile of this wave down, and we'll get a level where the POC is. Sorry, this is kind of a tangent, but this is just a good way to practice this. Let me see where the POC is. It should be a pink, whoops, no, should be a pink line. Oh, it's right there. Hard to see, I don't have it extending very far, right? There, oops, right about there, a little bit lower. Anyway, that's your point of control of that range, right? So it doesn't trigger anything here. Sometimes you get a trade signal there with like a green bar or a star. There's nothing there. But what I want you to show you is with my signals, once this starts turning pink and it's not turning purple anymore, right? It's not going pink, purple, pink, purple, pink, purple. It's going like pink, black, pink, black, pink, black. Like the only ones taking control are bulls, and then sometimes just it's neutral, right? Black is just neutral, or like this like brownish green color is just like a neutral. But notice how the only ones getting any signs of momentum are bulls. Doesn't mean you can't short from mean reversion, but it means, you know, there's the potential for bulls to get trapped here because they're so strong, right? So now here's this wave to the high, right, of that, and we get under them right there. And so when you get a star or an orange bar or some kind of a signal, this one didn't quite reach it, but that would, if this wasn't happening at blinding speed, that'd be your first sign that things are getting bearish. And then the algo, my algo, confirms that with a purple background, that bears are now the only ones with momentum. So if you were still bullish, this would be a buy because it's a star coming after the purple goes away. But we've trapped these guys up here. So that is a reason to be bearish on a higher time frame, because this is looking at the wave and this is looking at the bar, right? The wave is over 1, 2, 3, 4, 5 bars. So that's like looking at a higher time frame, like looking at one of these bars, right? Just got beat. So, and then if you look here on the 80 tick, you have pink bar star that's orange. That's like the best signal you can get. This is like the highest level you can get, right? And it came after all of these bulls got in the market, right? They had no power up here. Sellers just pulling their orders, and then suddenly huge aggression there, right at the voodoo range level, right? So that's kind of cool. But anyway, comes down, back, retests there. It does it again here. So I know it was going too fast to do anything about it, but it's good to see that the edge is there. You know, the edge is working. So anyway, now look, even though this one technically signaled bullish, right? We could see down here that we went way too low on the orange bars here. We went beyond the red. So we really shouldn't be buying the first attempt. The farthest it's usually going to go is the midpoint, and it's very rarely going to get to this blue line. Instead, we should be looking to short rips once we see this, right? Especially when it's a lower low. See that? It's a low. It's not even divergent, right? It's a lower low. So yeah, and it's just it's potentially going to take this low out, right? All the momentum's to the downside. They're winding up to push this down. That's what that means. So when this comes back up, see how it can't get over this pink area? Momentum is in the market, right? So now the rules change. Rather than having to wait for a signal up here, like I did during mean reversion, I can now take that signal here at the midpoint. Okay, again, it was too fast to actually do in real life. But now you'll see the momentum has completely changed. We're now going into this area, which was the low the last time the Bears, when the Bears lost control overnight, was in this shaded area. I want to show you how this is treated. So see how they attempt to bounce off the voodoo range level? Just as they get outside of, they get underneath that, they try to trap those shorts, right? With this star. Am I going to buy this? No, because we've gotten way too far down. Now, there is divergence here. See how this low is lower than this one? Yet we're clearly going straight down. So there is a decent chance that we're going to get back to this blue line. And Simon, if this wasn't CPI, and this just happened in the middle of the day, Simon would probably buy this for mean reversion. I'm personally not comfortable with that, even though every signal says I should, right? I'm getting a star, getting a green line, and the purple's ending. And so it should work more often than not, but I have a hard time when it doesn't, following up with the next trade. So I personally don't take those because this is because of those conditions being so bearish. Now look, the purple comes back for one bar and then disappears again, and we get another star. This entry is way better than this one. Note the orange is no longer going underneath the red, right? Clearly divergent now, right? Clearly divergent. And see how we're finally getting this blue line off the floor? And notice that this blue line can't get under, see how here it got under the mid section, that pink mid section? It clearly is getting easily under it, and then retesting it from below and going lower, and then eventually expanding its range. But see how here it can't get below that midpoint? That's actually a sign of bullishness. So this one is a better decision, better pointed decision for a mean reversion trade. It does not mean that we're done going down. And I think that's a very important point that people forget, that just because you're getting a bullish signal, if you have reason to think that it's bearish, don't assume that you're going to go any higher than the midpoint of this. And you might not even hit it, but you're probably going to get the blue line, because it's just so hard. You need so much momentum to keep this going, right? Notice it gets into the blue line, gets into the blue channel, right? But it can't get volume in there. See how the yellow line, it just gets stuck underneath that channel? That is really strong selling, right? It's normal in a balanced market for all of the trade volume to stay inside of here. We haven't even gotten the POC of a single bar in there for a long time. So you can't expect a reversal here. And that's why these tools are so helpful, because these little nuances like that are key. Simon does a lot of these things in his head without even really talking about it, because it's just, you can't like explain this in the moment. It's just too much to explain at once. But in his coaching, he explains that, this is not you can take the mean reversion trade, but don't expect it to get all the way up here right away. You're going to need to make a high, probably take out a low or retest a low, break this high, and then retest here before you can get this. Okay, so you can see that the bears are just clearly in control here, and there's just no reason to do any buying. Now, notice you've only had 16, 17 seconds, so really there's no way you could be trading this in real life. But if you wanted to wonder, if you know you don't want to be bullish and you're like, well, how do I short this, right? Well, we talked about how you can short it on the top if it wasn't so damn lightning fast, right? But notice how before we identified this shaded area as an area where we thought that bears would have to. Well, I guess I might not have explained this clearly, but the that low, that last time that bears were in control was in that range, right? That's the last time they pushed to that divergent low with the low volume, right? And then bulls took over above that. If we can get below this and stay below it on a retest, like this and this, then that's a sign that all of the bears that were trapped below that are now going to be released. And instead, these buyers that got long up here earlier and probably who bought all through here are going to get brutally trapped, right? So if you don't have a location, you really don't just want to be like selling the lows. You need a location to be active, right? So for me, what I would do in this situation, I would find the nearby Voodoo range, which is here, the dashed lines of the current Voodoo range levels. I'd need to know where old bears were trapped because I don't want to be getting short here as we get into the low where they were previously trapped, because they're gonna react to that, and this is gonna be really hard to hold through. Instead, I'll wait for them to reject it like that, and then I want to see them trade below the Voodoo range level, right? So this is not good enough. You see we're getting buy reactions off the Voodoo range level. The algos are not ready to give that up yet, right? So this short, way below this, it's not in the right. There's too much. You need so much momentum to keep this going straight down. It's not ready yet, right? They're gonna react to this with buys. See that? They're gonna try to trap sellers down here. This one, same thing. It's not beyond the Voodoo range level, and we're still way below this, right? The location, the location on the higher time frame might be right, but the location on this time frame is not right, which means the timing. The smaller the time frame, the more precise your timing needs to be, right? So the timing is not right here. Whereas if you come up here and you test that and you reject it, and now see we've gotten underneath the Voodoo range level, and we're putting in actual sell bars below it, right? So this one we don't buy. But now that we've done that, now look, this one closes below the Voodoo range level. It rejects off the previous trapped bears zone. That one is my first momentum sell. Is it risky? Yeah, it's risky. I'd much rather sell here at the midpoint than here. But this is the first opportunity to sell if it wasn't blindly fast. It doesn't mean you have to sell every one. The other way to do that, if you're not comfortable with that, and I would totally understand if someone wasn't, is you mark off the very next down triangle and then look for a signal off of that, which is here. Because most likely then you're going to get some sideways action, and you're not going to get an algo signaling here unless they're continuing to put in selling aggression. Notice all these green lines here, which are previous swing lows. Those are usually going to get hit if the bears are in control. That's just the way it works. So you would expect that to break, and that gives me a little more confidence with that short. Again, I didn't take this; it was way too fast, and but you would expect these green lines here to get broken, right? You would also expect the midpoint to act as a resistance if it comes back up there. So remember, my stop would go up here, and my entry would go down here, and I'd be taking profits into this break and then holding a runner because there's momentum. So this would be an expected reaction. Note, here's your triangle, right? So if you didn't take this one, you could technically take the next bearish algo as long as you haven't had a bullish response here. Now this is really, this might be too rough, right? See how this is just a little bit beyond that red line? And so by the time I see that, I'm kind of expecting that we're going to get range expansion here, and bulls might actually try to pull this off. So I don't want to short this one as much, right? But once we get this retrace like that, purple, that's an okay short. That's an even better one. It trapped so the purple diamonds are my own algo signal, and the way they work, I'm not going to explain how I build them because it doesn't matter. But the way I trade them is that when they first occur, that bar is usually going to get traded back into, right? But then if I can get a signal in this range, in that same direction, it's usually a good trade. So what you can do when you see, what I can do when I see these, if I see this, the very best way to handle this is to mark off that zone and then to wait for a valid entry signal in that area, which is right there, the orange color bar and also the red vertical line that occurred inside the range of this bar that's associated with this purple diamond. So the purple diamond fires, it tells me this range is likely to be defended, but what usually happens is they trap first, right? So, I mean, you can be cheeky about it and try to get short here, but I'll just wait for the signal. And then your stop now can go up here at that red line, or just above it, right? And so now you get the extension, right? And notice the red line is not even being approached there, so that any attempt to buy here that was coming that warned about is over. They tried to push it up, and it's like they're not going anywhere with it. And note the blue line is clearly going below the area, so we're at least neutral. We're not bullish. That's how that works. Okay, so this is just there's not enough bullish momentum to take such a low odds entry as that, so I'm not buying this at all. I'm just not interested in any buys here. It's not neutral yet. See how we're rejecting off that midpoint? I'm okay missing the first long in this kind of situation and just focusing on those momentum shorts. Okay, notice we've turned purple here again, so that tells me do not buy until that ends. So this is my first opportunity for a mean reversion trade, right? You can't really see it, but it's a star and a green bar, and it's got a green line, and the purple just ended. Everything is good about this, right? If the market does not have bearish momentum, this is going to work most of the time. But if the higher time frame is bearish, this is going to fail. And where is it going to fail? Usually at the blue line, sometimes at the midpoint, but it's very rarely going to get back up here. The V reversal that everyone remembers is really rare. So don't expect it, right? Be okay missing these trades, even though this exact same setup, like all of the order flow that the algo is looking at is bullish at this very moment, right? And that's why we're getting the signals. The algo is looking at things bar by bar. It's not looking at the big picture. It is my job to decide whether or not I want to be a buyer here. It is the algo's job to say, if I want to be a buyer at this location, this is where you do it, right? But clearly, what should be clear is the only reason I would want to be a buyer here is if I was targeting this blue line, which is probably where it goes. Yep. So I bet you that's as high as it goes, if I had to guess. I don't actually know exactly, but I'm guessing that's as far as it goes. And it doesn't really, if it goes anywhere higher, it's going to reverse here. But see how the yellow line is going more than a 45-degree down. Bears were clearly in control. And in this case, we have not gotten a big push down, which is interesting, right? They're not even needing a lot of pressure. So, I mean, you could try to buy that, but it's probably not going to go any further than this blue line. And certainly, I would doubt the first try would go to this midpoint. So, do you have great risk reward here? No. It's just not the right conditions for a mean reversion trade strategy, right? So, what you would have to do is either wait for a pullback into this zone, right? You could wait for that to short, or you wait for a signal at the midpoint of the channel, or you wait for a down triangle to set you up again. So this one does actually work out, but they can't get the volume to hold above the midpoint. So if you bought this, you'd sweat for a bit, but the stop goes down here. So that high odds trade, like I said, that was the one key that I didn't see. We're not trading those orange bars aren't getting below even this green line. So sellers were really active here, and they were in control here, but they aren't that aggressive. And then buyers are trying to get aggressive here. They tried to hold it, they came back, they tried to push it lower, and they couldn't. I would expect this low to break, and they just got a heavier retracement here. I would have gotten stopped out if I would have tried to sell this, but this would not be like the worst place to sell. I know it's an orange bar star, but it's below the channel, and there's no triangle up over here to trap. Right? No, sorry, no triangle down. So, like when there's a triangle down, and you get a retrace back into it that rejects, you've probably trapped some buyers here. Right? If there's no triangle down right there, what that basically means is this whole area from this triangle down to the low, so from here to here, this is fair game for a natural retest. The retracement can happen inside here, which is great if you're trading mean reversion, but horrible if you're trading momentum, right? You don't want to be shorting this when you know that it's natural to come back to the last triangle, right? If it's totally normal, if I told you it's totally normal, like look, I can do this anywhere on the chart. This is what's great about using something so objective like this. So I can take any triangle on the chart in the direction of momentum. So there's a down, right? It's bearish, down triangle to the next low, which is here. And a very natural retracement is to come back up to that down triangle before we continue, right? That would be very normal. This wouldn't be a problem because it wouldn't stop you out if you got short here, right? Because the area is so small. Well, once you put in this down triangle and you don't get another one, and then you get a buy response, right? You don't sell this because it would be natural to come back up here and test this to make sure bears are still in control. And I realize not everybody has the algo and all that, but you can just see that is the benefit of having a system like this, is it gets me micro location, right? I might have I have nothing on my chart there, right? The voodoo range level's here. I don't have like point of control or anything there. I don't have any reason to think that price wants to be there before like seeing this. But when I see that triangle, I know that if there's momentum, I should say even if there's really bearish momentum, it's natural to come back to that location, right? This last triangle is where I expect the market to try to test. I don't know if it does. It doesn't always, but that's where it like wants to go, right? So we finally get another one here. And so this is your first momentum short. And I don't love it, but if you were really bearish here, that's what you do, and that's where you'd have to sell it if you were going to take that trade every single time. And the reason I don't love it is because there's not a lot of bearish momentum anymore. See how everything's kind of flattened out now? It's no longer doing this. It's not staying underneath the blue lines, right? Like this, it came in and tested it, but it just rejected right off of it. You clearly got under it. This was pretty momentous, right? But look at how now we've gotten back inside. Yeah, it's rejecting off there, but look, it's not making new lows now, right? So it's like, how bearish is this right now? Like, you don't know, right? So it becomes riskier and riskier. And that's hard because if you're trading momentum, you don't want to be like, it's really hard to like buy the high and short the lows, right? It's really tough. Most people don't do it very well. And if you don't, maybe just stop trying, right? Just wait for this sideways action. But when you have evidence that we might be going sideways, like these orange bars not being able to get outside of this green zone, and price trading primarily inside of the channel, that's a sign that momentum has slowed, and so these momentum trades are going to be less responsive, and you're better off shorting up here and buying down here, right? So let's see what happens. Maybe it just works. No, not surprised. It comes back up and turns into sideways. So see, this is balance, right? The channel flattens out. All the orange bars are generally inside the green lines, right? And we are trading the yellow line is primarily staying, that's the volume, point of control, is primarily staying inside of those blue lines. So now I want shorts up here and I want longs down here. I still need a valid setup to take it, right? Like this isn't good enough. It needed to be a purple bar here before the green with the diamond. So it's not a long for me, and I didn't get high enough to short with mean reversion. So there's nothing to do here, but it's just important to recognize that this is starting to look like balance. And so you don't want to be aggressively shorting these lows, right, when this is happening. It doesn't mean it won't be bearish again. Okay, there's our first short. Pink bar, orange bar, or pink bar star. In this case, you got both, which is better. See how, if you see this red dotted line and the blue line, I need my balance trades to have a wick into that area, or this area. Like this is okay. We talked about this earlier if you weren't here. Whereas like I don't want to be buying this if I'm balanced, right? I just don't have good enough risk reward to my target. Here you're getting short right at the midpoint. You better hope that momentum comes back in the market, but this is the very lowest point I can trade at this point, unless I think it's really bearish. So it's a valid short, but it's not in the ideal location. I don't know if it works. So your stop goes up here. So far it's working. Just trying to see if there's a long here. This is not a great long. So we're going to say no. I don't know if this works. That is a long, this is a long. So now we've gotten totally flat, right? And so I'm starting to I would feel pretty uncomfortable. I would have gotten some profit off here. Oh, actually, I would have gotten filled. So look, it got to the blue line. So that mean reversion trade is finished, right? I might have held a contract in case it got momentous again, and my stop would have to stay up here. But I'm primarily out of that trade. It works already. This would have gotten me thinking long. Purple bar, green bar with the wick underneath this purple dotted line in this area between the blue and the purple. And that's the trade. Like you go from here to here. That's it, right? And I know that doesn't look like a lot, right? But when the market is in a range of 60 to, before that it was 93. Let's say it's a 33 point range. And you're, in this case, you're taking 78.50 and getting out at the blue line 95, right? Maybe 90 right here. let's say 98. It's pretty hard to get right at the back, right? So from 79 to 99, you're getting 20 points there in conditions where we've been trading inside of a 30-point range. Like, you got to wrap your head around this, right? Don't look at things from an absolute value. Look at things from a relative value. You are getting 2/3 of the range in that one trade. That is the key to think about. It's not it's only worth 20 points. No, it's worth 20 points every time it does it. Every time it does it, and your risk is only like whatever that is, 12, 15 points, whatever the range of this bar is, right? Or this bar here. No, sorry, it's this one. This is probably at least 15, right? So, but 20 points, you've now pulled out of the market 40 points during a time when the market's going back and forth in a 30-point range. That's fucking great. Like, that if you think about it, what would you have had to do to get that trading momentum? Well, you could have first of all traded, let's take a look. Like, we had that triangle retrace trade. Triangle, retrace into that range of the triangle, reject, get an algo signal, right? Entry, 12.7, let's say 14. It's technically a little higher than that, but we'll say 14. So we would need, let's see, to get, we said 40 points, right? So in this case, let's see, 14. So you do get it here. So you would have to get a trade like this, right?
this is what a momentum trade looks like that gets you 40 points. That's the kind of move you would need to hold through. Remember, hold, not trail. You would need to hold your whole contracts through here. I don't usually do that. I'm usually enter, take 2 off, take 2 off, hold 1 in case it goes lower, right? So a lot of my profits is getting taken out at like 15 points at 1 to 1, and then the rest of it I'm getting trailed out, which is fine, but it doesn't pay you as well as, I don't remember exactly where we were, but these two 20 point here, this one and this one, those two 20 point, this one, and it's here and here. Those two at full ties trade pays you more, right, than taking the momentum trade and being like this and getting, you know, profit on the break, profit at the level, leave a runner, which probably gets trailed out, right? It's equal or less, believe it or not. This trade here that looks so pretty because it's so fast, right? It's exciting. Now, this is the other part of this, though. You have to ask, why am I trading? Am I trading for this like sense of, yes, I was right. This is so much fun. Look at all this money I'm making. If that's why you're trading and you're not trading for income, like cha-ching, 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 right? If that's not, if this is too boring for you and that's not going to keep you interested in the market, then I guess you're going to have to wait for these. But guess what? These don't come around that often. And they don't work as often either. Those momentum trades only work maybe if you're really good 35% of the time. Those breakout trades especially, maybe 30% of the time. But just those momentum pullbacks, maybe a little more than 35, maybe 45% of the time. The momentum pullbacks will give you a good extension, not just back to the low or whatever, or back to the high if they're going up. But these mean reversion trades are going to give you 20 points like 70% of the time. And then every once in a while you're going to lose 15 points. But if you're, you know, up 20, up 20, up 20, up 20, give away 15, dude, you're up 60, 55, 60 points, right? But anyway, so this is all still just neutral. And there's them in 30 seconds, right? So let's pass some of this. This is kind of a lot of chop. Like, it's an okay entry though. That one does work. Okay, so I want to show you what happens when things start to get bearish again. This is where it starts to get interesting for me, because I find this back and forth pretty easy with the algo. You just wait for the signal and take it, right? You just take every one. And then eventually one of them's going to stop. And that's how Simon trades all day. He just ignores the momentum. And I think that's fine. It's probably great for him. For me, I'm not confident enough to take every single trade. So I like to have a little bit of both. But in this case, what I wanted to show you is watch down here, this green line. Remember, the orange bars, these momentum bars, are staying inside the green, right? I want to show you what happens when they start to get beyond the green and into the red zone. You're going to see a big change of character. Now, this is technically not a setup, but, oh yeah, sorry, it is. Triangle up, orange bar is. Orange bar star is not, but triangle up, orange bar would have been a setup. This is a 3-bar setup with the pink background going away here. So you have pink bar, nothing, no algo, followed by a strong sense of selling, and there's divergence, which is the stair step, and then the pink background ended right here. See that? And it's a purple background. So there's reason to think that this is a good a good mean reversion trade anyway. And it just happens to, like, I think, continue. Pretty sure. I'm pretty sure this is where we started to accelerate. Okay, so we get underneath the radar, we get underneath the green. First sign that bears might be taking control, right? And probably first sign that you might want to hold off on. This is a 3-bar combo. You could take that, but your primary target's back to the midpoint now because of that momentum coming in. They make it to the back, so that's great. But no, this did not stop out yet, right? So this one
worked out really nice. It's a 3-bar combo. They don't work 70% of the time, more like 50. That's not enough. I would have needed a purple bar here, or I need it outside of the thing like this. I'm sorry, pink. There's no pink bar here. There's no pink bar here. There's no pink in the background. That's not good enough for me. Unless there was a triangle over here. Oh, I missed this. Triangle, retest. See that? So as long as momentum's to the bear side, that can be a pretty good signal. I did not see that. Okay, so now we have to ask, is it still neutral or is it bearish, right? Well, is most of the volume inside the channel? Yes, I'd say most of the volume's inside the channel currently. Is the channel falling heavily or rising heavily? No, it's pretty neutral, right? Back here it was starting to fall, but it's the channel lines itself are just starting to turn down, but potentially still neutral. Are the orange bars going outside of the green zone? No, not yet, right? So if we got a bullish sign here, we could probably buy it, which is right there. So that's a buy, and that gets us our risk off. It gets stuck at the midpoint, it looks like. We have a down triangle here. So we're just going to move this down. And if you think it might be bearish, we're looking for entry signals like that, diamond, that occur after a retest and reject of that zone. So if you're bearish, you want to take a momentum trade, that's where you take it. That one just straight up fails. And that happens, especially with the shorts. They love to fuck with them, right? But notice it sets up again here, rejected into there. Oh, and there's a voodoo, I didn't see this. There's a voodoo range right in the middle here. See that, those reactions there? So they're going to come back up here and retest that voodoo range level and then reject. I bet you this one works. I don't know if it does. I'm not looking at the chart on the other side, on another, I'm trying to be as neutral as I can and not looking at the chart on another screen. So, but that is a beautiful retest, example of a voodoo range retest. Here, let me just take this out so you can see this. So the purple line, let me take out all these too. The purple line, purple dash line is the voodoo range level. And when algos are in control of the market, such as within the first couple minutes of the CPI, right, or when there's like no one else trading, those levels are going to be really important, or I should say rejections of those levels, or tests above it that can't stay above it, right? So they got above it, they immediately reject, they try to get back up, and they can't hold it. This happened in a matter of 10 seconds. So I'm not saying that anybody watching and whatever would be able to do it, but you know, theoretically, if it wasn't happening so fast, this is a clear momentum move. And then you get this beautiful 100-point drop, right? Note here, orange bars clearly going below green, and then orange bars to red, right? So that alone tells me that this, while it is a buy signal, it's purple bar star, the furthest we're probably going to get on the first try is this blue line. So the risk reward here is okay, but what I'm learning is that for me, I'm getting beat by these too often. So I'm waiting until this low gets taken out, or at least until we get some kind of a pullback, so I can have like a 5-point risk here on NQ for like a 20-point gain, right? That I'm fine with. But buying way up here, like I would when it's neutral, hoping that it comes all the way up to here, is just not working for me. Watch how it works here. It does. So it works exactly the way that I've been taught it should work here. You get in here, you hold for dear life as it chops around with your stop just a little bit under the low a day at the point, and you target back up here. That's the way Simon's trading them, and it worked beautifully, right? And that's pretty cool. But it doesn't work like that every time. And when it doesn't, I'm having a hard time taking the next trade, which is likely to work really well. So note here, we went orange all the way to the red, and then we come all the way back up here. I should say orange beyond green to orange beyond green. So that expansion, see how here it was just beyond green to the midpoint, beyond green all the way back to beyond green on the other end, right? That kind of expansion, I am noticing, especially when we also have expansion in volume. So see how this is the biggest volume down? I could show you, but you just gotta trust me here. And then this one's now the biggest volume up. See these previous volume up waves went here, and the previous volume down wave went here. We'll make that red. So this down wave clearly had more volume than the previous one, right? Whoops. And then this up wave, whenever it ends, also had more volume than the previous up wave. So that is a classic volume expansion in both directions. When we get that, we should expect range expansion in one direction or another. And the direction of range expansion is generally the one with the momentum in the like higher time frame, right? So in this case, it's been going down, right? So it's not a sign that the down is done, but it's probably a sign that there's another leg coming. But interestingly, here you could do this same. If you weren't sure, what you can do is you can measure. If you're like, let's say it wasn't so clear that it was bearish here, you could measure from the beginning of this wave to the end of this wave and find right here, find where all the volume was. Okay. And in this case, the volume was here. Okay. At 12.7550 is where the volume point of control of this entire wave is. And so now that green line, we need to get above it and trap them above that for this to reverse. Now you can also take the DVP from the low. So the low started here to the end of the volume wave, which is right here. That point of control is this, right? 12.606. So now to get bearish, I need to get under this one and get a signal. To get bullish, I need to hold this and get a signal. So let's see what it does. So I'm not doing anything here because I'm expecting range expansion, and I don't know which side is in control yet, right? I would assume it's going to be bearish, but there's no signal here. So see how we clearly went right through that point of control and we're getting an aggressive side down. So right here, I know I can't be, I'm not going to be bullish. And the only other thing to do is to be bearish, right? So now I need a bearish setup, which would be a pullback into this triangle, and they just drop it. That's fine. So I'm not buying this. This is the important part. I don't care about missing this move, right? It just didn't set up for me, and that's fine. The important thing is knowing not to buy this. And again, why do I know not to buy this? Because we've given up all the volume. The volume in this range expansion to this low, it occurred, the volume builds were here and here on these green points, 12.60650, 12.57550. We need to be above both of those and respect them to get this moving higher. When they're this far apart, that's really hard to do in one try. But one way or another, I am no longer looking for mean reversion trades here. I am only looking for shorts as long as we stay under this. What I would love would be a retrace back to here. And remember, it's normal, totally natural to come back to this triangle and notice there's a voodoo range level there. So 2 minutes after CPI, if I want to trade, I know I'm bearish, and I'd like to get short on a test of 12.615 or maybe 12.60650. Is it going to happen? I don't know, right? But that's my ideal scenario, and primarily what I'm focusing on here is that even though I saw the expansion in range and momentum to the downside and then the upside, I am no longer looking for longs because these longs that got long here are trapped now underneath 12.60650. Okay, so I'm gonna skip this and skip this completely. And again, this is just, I'm just a more conservative trader than some people in the Trade and Perform room, and this is what I've learned to do to keep myself from getting run over. So here's my first potential momentum entry at that previous point of control of the wave down. It's an orange bar at the midpoint of the channel. Is it an ideal short? No. An ideal short would be up here at 12.606 and at the top of the channel. Are we going to get that? Probably not, because I expected range expansion to the downside. How are you going to get range? It's not even going to be there's not going to be no bearish momentum if we get it back up there now. So, if we did get back up there, it would have to like test up there and immediately reject and keep volume below this midpoint basically. But So that's my ideal trade, but this is good enough. So I'm okay with shorting that. And you get a nice little push. Now here you'd have to take some profits because you got purple, 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 no purple, and then the green line with all these algos firing, indicating that there's buyers coming in. It doesn't mean it's going to reverse. It means it's probably going to come back to the triangle. And so it's going to give me a better entry. So if I got, and this is where trade management is so much harder than getting in a trade, you guys. It's deciding what the hell to do with it. My system says I can get short here with momentum, targeting taking out these lows, hopefully taking this previous low, this green line. I'm then taking profits as we break this low on that purple bar. And then I'm all out when we print this, is how I'm trading this, right? Keep in mind, I've got a trailing drawdown. I'm not holding runners quite as much as I might be if I was in a cash account. With my prop trading account, there's a trailing drawdown, and so I'm very averse to giving back profits. I'm okay with giving back about 50% of my profits, but not 100%. So I'm just out there, and I'm okay if it doesn't come back and set me up again. If we come back up here, I can get short again. You come back up here, I need it to set up. It didn't, I don't think it quite touched the line, and it didn't give me an algo, so if this continues, I just miss it. Yeah, that sucks. Oh, okay, nope, we're good. I'm glad I have an algo to tell me not to take that short, right? I missed this long for sure, right? Even though it would technically, this would technically trigger if I was thinking it's mean reversion because it's a star after the pink ended. Sorry, purple. Purple ended, got a star at location, looks good, right? But this, I was expecting range expansion to the downside. This could have been the low. I'm not short anymore, right? I don't know at this point what's going to happen. I'm assuming that it's going to keep, the market's going to keep doing what it's doing because that's what usually happens. Sometimes it just ends and reverses, right? You don't know. If it does reverse, what's going to happen? Well, we're going to come back up to this high. We're going to come back down. We're going to bounce and go higher, right? But right now, I'm thinking bearish to neutral, so I want to set up shorts up here. I don't really care about the long, right? There's no. If there was a pink bar here, I'd take this. I'd miss this trade. Although I love that it came back to the location I wanted, it's not a good enough setup for the short side. Shorts need to be perfect for me because they love to trap them. So I would skip that. Did that trap? This is a much better short. You can't really, here, let me get rid of this green line. So the location is correct. It traded above this high that I ignored because it wasn't quite strong enough. Traded above that high and closed lower. I also had that point of control from that up wave here. This is a much better short. And I had pink background disappearing. So buyers are potentially trapped. I assume this is going lower. Yeah. And again, I'm taking profits on the break of this low. Right there. And then I'm out of the trade when I get that signal. Because again, now I've got pink followed by an algo. So I know this might be kind of fast. But this is a mean reversion entry. On a higher time frame, it's a momentum entry. If I wanted to, I could hold runners here. But my stop would have to be all the way back here. And that's a lot to give up. Right? So I would rather take profits here when we break that low. And then get all out there. Now, it is at a good location for a short, and if it reverses, I can re-enter. No entry. Yep, there. That's my first opportunity to re-enter, but I need range expansion, and I do not have any sign of range expansion. I've got momentum decreasing, right? Now, on the other hand, I do have an increasing volume to both directions, so maybe it will just drop. It does. Okay, so it comes in after. So this is probably going to be a divergent low. That's interesting. So I'll have to look at this again. My thinking here was it looked like momentum was shifting to be neutral, right? Because this momentum measure was getting stuck inside of here. But what I'm actually seeing now, the more I think about it, is that what we have is a higher time frame that's very bearish because we have that gap. We're getting a gap down. We're producing a gap down here. It's still 7 minutes in, right? So we're producing a gap down. And so bears are in control in the higher time frame. They've now trapped more shorts below this 12.57550, which was the wave to the low, right? Oh, did we put in a new wave to the low? We did. So we can do this again. We can go like that. So now we can move this to here. and we can say so this becomes a better long because it's a location at the point of control showing a reversal. So that's definitely exit short and potentially get long, right? But then I don't want to get short unless we take that back. And see how they try to bounce off of it? This is a reasonable long too. And it just fails. And now I would need a short entry, which just does not occur. They just don't give it to me. And that's fine. That's not good enough because none of this is good enough. Yeah, so this looks like a long. All right, it's a 3-bar combo. Purple's disappearing and you get a star with the validation of the green line. But now you have to ask yourself, how neutral am I? Well, volume is now spending all this time below the channel. Every time it tries to get back into the channel, price falls down. It is not ready to retrace back to the top of the channel. For me to be neutral, I need to see volume staying inside this channel, dipping out of it, and then giving me the signal. We are below the channel, and we're staying below the channel. That is down momentum, and I am not fighting that. What I expect now is this orange is probably going to put in another bigger low, maybe down to the red or the green. That's what I expect. I also don't see a short here, by the way. And maybe we will do one more retracement. I don't know. That is your first short, but it's a diamond, right? So this is your first technical short. What I would prefer is we come back into this zone and the algo fires again. Yep, that's why you don't buy. That's why you don't buy or sell the actual those purple diamonds are dangerous. Okay, this is a much better entry. It's at the location I want, the 12,550, where the it's at the voodoo range level. It's in the direction I want, right? And I've tested beyond this diamond, and we're coming back into that range. That is a beautiful short. Stop goes way up here, and they just kick it. No reason to buy. No reason to buy. This one's a little better. This one's a little better. See how they're not, so this first one, see how the volume is just, it's bigger than the previous volume? See that? As soon as this occurs, this one, as soon as you get, I just saw it with my eyes, but once you've gotten volume on this downwave, bigger than this previous downwave, which occurs definitely here, maybe before it, I'm no longer interested in mean reversion trades to the upside. I'm now bearish only. So the key is you need to be able to flip back and forth between what am I doing? Am I trading momentum or trading mean reversion? Or you have to pick one or the other and just know when not to do it, right? So if you're trading mean reversion only, you stop buying here. If you're trading mean reversion and sometimes you're trading momentum, you're shorting here only and not buying. One way or another, you're not buying this. And again, that situation has not changed. It doesn't mean that it's going to go lower. It means I'm not looking for a push any higher than this midpoint. And so the times this stops out is not going to pay me for the times it gets to the midpoint. Sometimes is it going to go higher than that? Yeah, but usually it's going to do this. That is a momentum trade. Triangle up, star down. And I bet you anything if we draw the DVP to the low. Yep. See how the point of control, pink line here, interacts with this, right? And we're getting aggression there, right at the voodoo range level. That is an okay short. You're shorting the low right after CPI. I mean, is it quote unquote safe? No, it's fucking dangerous, right? It's super aggressive. But if you want to be bearish and you want to trade momentum, you're gonna have to short some lows. You're gonna have to be, grow some balls and just short it sometimes, and accept that you're gonna sometimes just get totally wiped out. But sometimes you're gonna get really big moves, right? This is a very, very strong signal normally. So I look here, first of all, did I have a bigger down wave than the previous one? No. This is a divergent low with volume. Am I getting orange bars that are staying below the midpoint? No. Orange bars came up above the midpoint. They came down, they couldn't even cross the green. This is a good time to get out of your short, in my opinion. We are likely going back into mean reversion here. But there's no pink bar here to really make this really strong for a buy. but I'm definitely getting out of my short, and I'm expecting some kind of retrace here. I don't know how far. Yep, that's about right. So, you know, you could be brave and stay short, but I'm just taking this piece here and calling it good because, like I said, it takes guts to short this so low. Now it does come back up and test the voodoo range level, but there's no algo here. Otherwise, I'd like a short here or short here, but there's no star. It's going in the wrong direction, right? The star and the diamond is going up, which I wouldn't buy it, but yeah, there's just no signal here. And then here's that purple diamond again. So if you thought it might be neutral, this is starting to look a little bearish, right? Getting underneath that green. But volume is continuing to decrease. See that? So if you thought this might be neutral, which I wouldn't blame you, I'd want to see that bar get stopped out and then trigger again. Sometimes they're just going to go and you're going to miss it, and that just happens. Sometimes it just works right away and never comes back underneath it, right? And then, of course, the other thing you can do is draw this again because you made a new low. Draw it to the low from the downwave. Okay, it's way at the bottom, right? Which makes this a pretty good, pretty sweet buy. And then you can't short unless you got under that, in my opinion. And then once you've gotten this triangle, now I can draw this one. And that's also at the low. Super important spot, right? This zone here needs to hold for buyers to continue, and sellers must break it for sellers to take this. So this becomes a pretty good scalp. But really what I want to see is what the market does down there. I'm not really interested until I see that. And it could just chop around because they're gonna protect that. They're usually gonna have a reaction off of that. This didn't reach it, so I'm not usually doing anything there. And that might be a mistake because it technically did set up. Yeah, look at that. So the reason I said it might be a mistake, this is what I just saw. So this is a long, right? We got the wave to the low. They put in all the volume at the low. We absorbed that, came back with high volume, right? And aggression confirmed to the upside. So that is probably a good long. And you really can't be short unless they take that. And so what ends up happening here is you are now shifting to bullish for a moment. So you want to get long on a retest of this triangle if it triggers, which is right there. So if you didn't long that, this is your momentum play. It's still at the low of the channel. Your target is this voodoo range level, which hits, right? And again, I realize that doesn't look like much, but you are going from 55 to 75. I'm telling you, 20 points pays the bills. And if you can do that 70% of the time, you can take bigger. You can take bigger size. So that is a classic trade and perform setup. That is what Simon is doing all day long. Just not a couple minutes. Oh, this is not. This is at the open. So I don't think he doesn't usually trade the open, but that's how I would have traded the open with his system. So here's this same idea. Purple triangle, or sorry, purple diamond needs a pullback for me to get long, just to get short. Notice here we got a little bit over the red, and the buy wave did not overcome that. So that suggests exhaustion. See that? That is a divergent high with momentum to the upside. So everybody bought this, and they're not beating it. So if we can get back up there and test up there and reject it, that's perfect. Oh, it didn't quite reach it. That looks good. It missed it by like ticks, right? I wanted it to, on a higher time frame it works, but on this time frame it just didn't quite reach it. I might have made an exception there because it had the pink bar, the pink background that was ending, plus the star, plus the triangle up star, and yeah, momentum has been going lower. Oh, and then the other thing you can do here. Now here we're gonna delete this, but we're gonna keep this level because it's still valid. I'm gonna show you why in a minute. But you could have done the exact same setup to the opposite side.
and you'd see POCs here, and your entry interacted with the POC, making that a pretty good entry. Hopefully you can see that that works a lot. That's a beautiful trade. Look at that. Jesus Christ. So I did not take that because I don't check the open, but that was pretty good. This just got a little bit extended. You can see that we are getting underneath the green, so it's clearly bearish here. Bears have momentum. They're not exhausted. And the sellers are clearly increasing volume. The only problem here is the last triangle is way up here, right? So getting a decent retrace here is probably likely. And if I was short that, my target is this green line right here, which was met right there. So I am primarily out if I was short there. I am not a greedy trader. I am totally happy with, what is that, 30 points? I'll take 30 points all day on full size, right? That's cool. This is a good trade right there. That's fine. If you want to hold one contract just in case it, goes up 400 points lower like it did today, fine. But I am just taking this personally, not calling it a day, but just calling it a trade, and then waiting for the next setup. And I'm okay because I expect them to try to take this back. See that? They try to come up there. Now remember, I said that this zone was important. This green line and this zone here, I said was pretty important to see if they could hold it. Sellers would need to hold below this. See that? Sellers need to hold below that, and they don't. Oh, they do. Look at that. Pink bar, orange bar. High is between the red dash line and the blue line. That is a perfect short. It's a new low. There's your line. I mean, you guys, it just over and over again. Okay, so this one looked like a long, right? It closed, interacted with this. This one looks like a long scalp, and you do get a little something. It doesn't quite reach the target. And this one is way down here. So that makes this short a little less good because really what I need to see is I need to see shorts take this line. So this short looks really good to me at first, but it's not exhausted. They did make a bigger up wave, and they did not, right? This might not work. Ah, it does. Oh no, look at that. So they try to get underneath this, and all they get is a purple bar, which basically means buyers are pulling their orders more than aggressive traders are selling. So while there is definitely action on the bid, it's like they're exhausted, right? Here's another one of those diamonds. So if we get this tested below and then they come back up into it, that becomes a pretty good trade. But really, I need them to get above 12,436.75 for me to be like bullish. And see, instead they're rejecting that. See that? It's below both of those lines. So this was an okay short. This is a better. Wait. The most recent low, I got this wrong. It's not this. It's this. This is not a good short. You're in between these two VPOCs. So that's not a great short. So I should be skipping that, I believe. Yeah. Nice. Nice. Okay, cool. So skip those. That's good. That's really good. So the long is here. They trap underneath it. They come back with a, oh, I didn't see this. Okay, so the one time when you don't expect these purple and blue diamonds to get a retest is when they themselves are doing the trapping. So see how this was the support was developed here, right? Hopefully you guys can see that. We've got like 3 tests of support. And so when it's followed by these, this becomes a pretty good buy. If this blue diamond was here, I would want to wait until I get the retest. But when this is doing the trapping, this is actually the long. So you could long this, and you could long this. Oh, and we got it. Wow, we got exhaustion here. I didn't even see that. Fuck. Not paying attention. Okay. This is one of the reasons I don't trade the first 15 minutes, right? Because in real time, all of this happens quick. And so if even on review, if I'm not catching these nuances, and I realize part of the reason is because there's just so many things to look at. But if I'm not catching these nuances in the moment on the review, chances are, if it's going fast, I'm probably missing it in real time too. So I just have to work out the process for taking this trade with the VPOC retest like that. And like I said, this is the primary test. This one looks pretty good, but it's got this low right below it, and so I'm usually ignoring those. But then when they come back in with these diamonds work really well as a trap. When I say a trap, I mean it traded underneath a low and then came back in. The hard part is your stop really does need to go with the low, right? So it's a little bit bigger risk. But the target is to get back up to this blue line, which is met. And again, we're talking 19 to let's say 49 even. That's 30 points plus. That's a good trade again, So even if you bought all three, right? You get like a piece off here, maybe trail out. That one probably stops, let's say. This one pays you back and then some, right? Because you maybe lost 15 points here, and here you maybe you made like 10, right? So make 10, and that because you trailed out 5, right? So 15 plus 15 minus 5, which is 10 net, minus 15, so you're minus 5 net, and then plus 30. So now you're plus 25 net. So if you keep hammering at it, it works, right? Now, like I said, this to me looks like a pretty good short, but because we've basically neutraled out these lines in the channel, these blue channel lines, right? And see how it's going purple background, black, pink background, right? So it's more neutral now. It's not totally bearish. And then you can see these ones got a little bit exhausted below the red, and then they got to the upside, went above green, went above green, went above green, went above green, right? So range is expanding. The only concern would be if I thought that bulls were getting more volume as they go higher, but they're not. You can see that the highest volume mark was back here. They did not have more volume here. So I'd say this is an okay short if I was... the only problem with it is that I don't know if we're going to break this low. But the truth is you're really just looking for a quick 15 to 20 points here. I don't know if that stopped out or not. Damn close. It would have dropped back in either way, but... Oh, I didn't see. This one actually has a diamond on it. And it's at an established support. So I would have taken this short, and if it stops out and comes right back, you just got to take it again. Oh, does it not actually reach its... No, it does. Okay. It reaches its signal, or its target, and goes even lower. Nice. So takes out this low, which is where I'm taking my profits here, holding a runner, and probably... It's really close whether or not you take that runner out. Did we get a volume build? We did. I'd probably not take my runners out here. Because, see, okay, here's the question. What are you going to do if price comes back here? Because it probably will. Come back to the triangle and then reverse. As long as you're not going to get spooked by that when you got... In other words, you might go negative on your balance, right? So, again, the way I'm trading this, I'm managing this, is I'm taking 12 to 15 points to get 1-to-1, depending on what my stop here is above this high, so it looks like about 12 or 13 points. So I'd take 13 points here, right? And then as I break this last low, which is this green line, I'm taking another chunk, right, here. And then I've got maybe 1, 2 tops that I'm letting trail out, and that trail out has to be up here, right? So you have to decide, am I going to puke it when it comes back to break even? Because if I am, I should just be getting everything out here at a profit. But if I'm okay giving back 2 contracts worth of like 25 points, then you just hold it because it's probably going lower given that momentum is getting more and more bearish, right? Yet we're not exhausted here, see that?
And if you can hold on to it. Now it also means we shouldn't be looking long here. And that I think is the thing that most people make a mistake of. They see this as maybe bear, like it slows down a little bit and they think that bears are done. And we put in this like higher low and it's like, ooh, maybe this is the low. And you get purple bar star, which is usually a pretty good signal in a neutral market. And you know the momentum is kind of starting to shift. See that? Well, it's like bouncing off the midpoint here on the blue line, right? But the problem is volume was really heavy to the downside, and look at the up volume. It's just getting lower and lower, and it's just nothing, right? Like you need up volume to be here, and you don't have that there, and the sell volume is like extreme, right? Yet you're not exhausted. You're nowhere near that red point. So it's really hard to get anything more than a retracement to the midpoint here. And if anything, you're only going to get to the blue line before they start to balance and then eventually go higher. It's so rare to get that V reversal. So even though this looks like a good trade, it's only good if you think it's neutral. And it's just not neutral. Even though it was purple, pink, purple, the volume tells a huge story here. And that's that sellers are really confident that they are not going to get trapped. These guys are not going to get trapped. And so this just shifts lower. Now, if you wanted to be a seller, the way you trade this is you look for algos off of these triangles. So this one didn't produce one, I don't think. Algos in that range. There's just no signal there. And now the next triangle's here. Now you can see that it's all purple in the background, right? Clearly we should not be looking for buys here. This is your first momentum trade. Again, you're at the low, right? You have to be okay with trading at the low if you're going to trade momentum, trading short off the low. Where's all the volume? Do you have any risk of getting trapped? Probably not. See, the volume is down here at that pink line, 12,379. Buyers would need to develop aggression above that or at that line. All their aggression was down here, and we're already getting triangle up, star down. Now it is a diamond, which means we might trap back in. So you'd have to be willing to take it twice, but that's an alright short in my opinion. Yeah, look, they trap back in. See, that's the problem with those diamonds. There, that one is probably better than this one. Let's see if that does it. I don't know if it does. Wow, they do it again. Okay, did they develop aggression above the green line? No. So, and yet we get another diamond, but notice this one is at support. So you would take it here, I think. That would probably stop. Oh, we took this trade. And so yeah, you'd probably end up getting stopped there. And then, so this is, we're looking for a long if they could get it at this green level. This one did not work. So we would need a star or a green bar on that 79, and it did not develop. But I think that short finally works. It just took that many tries. And that's how the shorts work. They just take a long time sometimes. So the diamond gave you the hint that you might want to wait for a trap back in. We trap here. This is the next one. Your stop goes a couple ticks above this. If you got sucked out of it there, you'd have to re-enter. That's just the way it goes. Oh fuck, and then it goes higher. That's bullshit, right? So any reason not to be really bearish here? Let's think about that. We know that the sellers had a bunch of aggression here, a bunch of volume. They didn't get exhausted. Buyers aren't really able to get outside of that green line. I don't see any reason to think it's bullish. But do we have anything reason to think it's neutral? And I'd say probably not. I'd say I would expect these highs to hold, and this is just going to continue lower. The trouble here is that my level, which is on that pink line, just making sure that's correct, is slightly above this point of aggression. If this would have been here, I'd be like, get long, right, on any pullback. But when the aggression is below where all the volume to downside was, you kind of expect them just to defend it like that, right? And they just Instead, buyers try to defend, sellers try again, and they just fuck around here. Yeah, that's just a bunch of bullshit. That's what that is. They come back up to the Voodoo range level in reverse. Those bastards. Okay, yeah, I was gonna say, there's just no trade for me here until here. This is the first sign of aggression at that POC. That is the first time you can get long, and I did get long there and got a piece of this, right? And then it did trail out, if I remember correctly. So I got a piece of that. That trade worked. Here to here. You're only trying to get to the blue line, right? Just a nice little scalp. That's all it is. Comes back and stops out. Purple bar, green bar, but it's got a diamond, so I'd have to wait. And you did have some bullish momentum finally. So if they trap that back in, if they go, yeah, that, ugh, gross. Yeah, there's nothing here for me to do. There, that's the long. I believe we took that too, and we got another little scalp out of it. You can see it didn't quite meet its target, which sucks, but we would have gotten our risk off. In this case, I took, the way I traded this is, how did this work? I know I got paid here. It came back down. I saw this, waited. I believe what I did is I bought this one, which is a little bit premature. I bought this one. It came back in, and I bought 2 times size on this pullback, which is a little bit questionable, but that's what I did. And then I took most of my trade off on this push, and when they couldn't get it any volume above this, I just got out of it at pink bar star. Now, when it traps back in here, oh, it doesn't. Okay, if it traps back in here, you have to take it again. Instead, they just reject. Oh, look, I didn't see this. This pink bar star occurred at that level. That's a short. Damn. And it's the second diamond at the location. See that? So this pink diamond occurred at this location that was already a high. That is a good short that I missed. Darn. Okay. Ouch. That would have been a good one. Okay, so I'm not buying that. Some people are. Note we did not get exhaustion, but we've clearly got bear momentum, right? We're getting huge push of bear about volume here. Only bear. All bear here, right? So I'm not touching that. I don't care that they're going to get it back to this. I know a lot of people in the room are taking this trade and getting out and happy with that to get 15 points. I'm just ignoring that. I don't like it. Sometimes it goes higher, and sometimes, but then people buy this and they get hurt. You can't buy this. You need to wait. If you're gonna take these trades, your target is here until it's neutral. You can't take this here. You can only take this purple bar star at the low of the channel when we are balancing around the channel. If it's bearish, do not get run over with this long. That is not a long here. I know it looks like a long because it is when it's balanced. The algo doesn't know that it's bearish, and you need to know that this is bearish. Whatever you use, you need to figure out a way to know that's bearish. But as soon as it goes pink bar star, you should know. Of course, by that time, it's too late, right? So if you bought this, oh, I remember how this worked. Okay, so in the room, we didn't buy this. We bought this. We bought this one, okay? Because we saw this pink bar star get going, and see how volume was way up here before, and now it's way down here. If you measure the DVP here, the level was right there at the star, right? And so we went ahead and took that long. I also noticed that even though this was pretty bearish, it started to settle down in this last low here, couldn't bring us below the pink area here, right? And it stops out, which is fine. Sometimes they're just going to take 2 tries, and then you need to be able to buy that again, right? And this one just didn't work. It just kept stopping out, right? And so I took losses here. And the only thing you can do about this kind of stuff, and it's funny because my coach, Simon, was like, don't trade this. Back here. He was like, don't you dare long. And I even said it when I was doing the review. shouldn't be long, shouldn't be long, shouldn't be long. But what I got mixed up at in real time was I was still looking for a reversal, even though there was no sign of any buyers, right? And I was looking for anything that told me that we might be reversing, which is the wrong way to do it. So this DVP trade works when you do a move like this, it works, right? But in that case, your DVP is way up here. And so what you need to remember is that to get bullish, I need aggression to develop above that. 12,324. We didn't even trade up there. So rather than looking for the reversal down here, when all the volume, right, on a new low, when all the volume was up here, don't be the first one back in. Let them work this out. And even though technically these are making new lows, I can't be drawing new DVPs and trying to get lifts here when the big volume, the wave to the low that was big, has its volume way up here and we can't even test it, right? And like I said, if you're in the trading room and you were listening to Simon, he said as much. He said, "Don't fuck with this." He said, "I'm not going to belong this. I'm going to wait till this sets up correctly." It was inside of a purple pivot, right? Which is usually not a great place to just be longing to get a reversal. They usually chop inside of those first, or you get a retest and go lower when it's bearish. But instead, I was focused on finding a long, and I did what I just during the day. I did what I just previously did, where I'm looking at this as, could this be the low? Let's measure and see what we have to get above. Totally ignoring the fact that all of these longs are trapped, right? And that's what this is showing us, that these longs are totally trapped underneath a bunch of volume. So we need to get above that before, or develop another big momentum low and get above that before we even think about getting long. So even though all of these look really strong, this one, and like it's hard because like this one's like, yeah, it looks pretty good, and it gets you a little something, and then when it rolls down and it traps back in, it's like, oh, I've seen this work, I should buy it again. You should if it's neutral or bear or bullish, but if it's bearish, you shouldn't, right? And this too, like this looks like a really good trade. This exact algo setup works great as long as it's not super bearish. When it's super bearish, it fucks with you. Right? It takes you out, gets you back in, takes you out, gets you back in. I shouldn't even be shorting here. I should just be stepping away until we trade back up here and I see what they do up there, or we develop another big wave. So here is our first big wave down. See how this big wave down, let's see, did it make a higher volume wave or not? No. So this big wave down here did not produce a bigger volume wave than the previous one, right? So it's what we call a divergent wave. So if I want to measure that, it goes from here to here. And the level I'd be watching, there's so much to see here, it's hard to see where it is. I believe it's right there. The pink right here. So I would need a buyer to show up there, not during the wave, but after the wave completes, which is this. So now I would need a buyer to show up at that pink level. And I don't think they do it. Yeah, it's got to be a star or a green inside. I mean, it's okay, I guess, to buy the triangle. It's okay. It's not ideal. There. Okay, so here, the level's here. Right there. So green bar, this is our first sign of aggression. The problem, big picture, is that we're not going to probably get above this on our first try. But if we're just focusing on trying to get a scalp to here for 20 points, I think this is an okay long. I don't know if it works. Oof, so close. So I definitely get some balance off. Does it stop out? It basically comes right back. This triggers again for a second time, so you'd have to buy that. Ah, yeah, then it goes. Yeah, Simon, yeah, I remember this. So this is right at lunch. Yeah, we took this trade, thank God. This one I did not take. I got the scalp and got a little bit spooked here and took out my runners at Pink Bar Star. And then this was right at lunchtime. You can see it's 11 o'clock Central, but it's 12 o'clock Eastern. Generally, in trend day down, lunchtime is a retracement that then gets reversed, and we close at the lows. That's generally what happens. I should have been ready to buy it here, but instead, all I could think about was a time last week where we were neutral, and I tried to trade lunch unidirectional and got like ripped up. And so I was not adjusting to the fact that lunch during trend days generally go in the opposite direction of the trend, and that makes this a beautiful buy. There's no reason not to buy this. This signal is everything you want. It shared the low with this, or if not, trapped just a couple points below it. Purple bar, green bar, right at the low. You can see here all of our momentum is either up or at least neutral, not below this green level. See that? All the orange is up here. Got a little bit extended, but it came back in. It can't get below that green. And then this blue line got clearly overextended here, right? This one too, clearly overextended, right? But all of the orange, which is really what makes sense, what matters for like who's in control, because it's a higher time frame, is bullish. And then all of this chop had the potential to trap some shorts at the lows. Like I said, the only problem is all of the trap longs up here, above 12,324 to 12,335. So the way to trade this is you don't trade any of this. You wait for this divergent low to get put in. You draw the line at the DVP. You get long here. You put your stop a couple points under this low, right? And then you can add here when you get the exact same signal, basically, an algo at the same level, and you target 12,324. So that's how you trade it. And you just hold here, right? I don't know if it actually continues. Let me just see if this. So this one does the same thing. See how it comes back in into the level, the 12,2775 level, and it prints a star. That's an okay add. If you were long here, you could add. You'd take some profit into the blue line. You'd hold runners, and you'd add them back here and take more profit at the blue line. I really want it to get to 12,324. Because if it does, it might set up a short. But if it doesn't, it doesn't. Wow. Look, it does it again, so you could take profit again. Again. Ah, there we go. Got there. Right there. Right, so there is where I'm out of my long. I expect them to have to chop through this. I never expect a V reversal. Never. I would rather miss the V reversal, personally. That is my personal preference. I skip them. And I'm okay with that. And that way, I can grab all of these. Because look, I mean, I know it doesn't look like much, but just like I showed you before, I would much rather take these high odds trades. Let's say we get long at this last one, right? 12,275 takes them off at 300, right? So already 25 points booked, right? Hold runners, add back what we sold here at 93, sell some at like 13, right? So get another 20 points, comes back in, same level right here, interacted, gave me a diamond. I can add it back if I want, or just hold the runners, take some off here, right? And then all of my trade is out at 24. And like I said, the very first of those runners were in at 74. That's 50 points, guys, on a runner. And I don't care if you're trading like one contract. That is account building trading right there. That is how you build an account and how you pass evaluations. Is you have a profit target and a point to add as long as you're right, and you just keep adding to that trade until you meet that profit target. And then at this point, now I'm thinking, okay, we should be. Remember, now we're past lunchtime. This is Central Time, so now we've gone through the lunch. Usually, we revert back to the same direction, and so now I'm looking for shorts in this area. This diamond here is not a pink diamond; it's a red diamond. That is a sign that this one, it's a speed bar, so this one developed really quickly compared to these last two bars, and that right there is a sell as long as it's at location. So I can just sell that, and if they trap back in, I can take it again. So I'm not buying that, but if they come back up again and they do it, they stop me out. So okay, they stop it out, and if they come back in again with another sell, I will take it again. That's just a purple bar. That's not good enough. Not doing anything here. There's one right there. Second entry, right? So this one probably, let's say it just stops. I might have gotten half off here depending on how much. If this is only a 12-point stop, I get my 1-to-1 off here and just trail out on the balance. But let's say that I didn't. Let's say I left my bracket at 15 points, and so I don't get stopped out or don't get tagged out, and instead I got stopped out on the full trade. I'm right back in it right here, and that one pays for the rest of the day, I believe. But you'd be targeting again. I'd get in here at. I'd get in here at the midpoint at 16, and I'm out most everything by the time I break this low, which is 80. So that's another 30 points plus 35 points, right? And then this low breaks, so I'm taking more profit on this purple one. In fact, I'm probably practically out of the trade, maybe leaving one runner, but 2 targets is like 50 points is good for me. That's fine. That's an interesting momentum trade I might want to look at. Triangle up followed by diamond might be worthwhile. Oh, the other thing you can do here, you guys, is you can do that exact same trade I was showing, but in reverse. So look at this. Simon showed me this today. Okay, wave to the high was divergent. See that? This was the wave to the high. It did not get as much volume as previous up waves. See that? Did not get as much as the last two. So these 3 volume waves are going lower and lower and lower, yet price is going higher and higher and higher, right? From here up. Yet volume is decreasing. It's a good sign if you're bearish. Bad sign if you're bullish, right? And it's a good reason to take most of your profit here, actually. But, which is exactly what I did, right? You don't expect 2 divergent waves, but sometimes you get them. When you do get that second divergent wave, it's really smart to draw this DVP. Identify that level with a POC and wait for the signal to get short. That's your short. And I can take that with full size. Right? And now you can see bears are getting in control. They're not exhausted, right? Orange is right where it should be when it's momentum, between green and red. Right? And now we've had a bigger sell wave. So if we're going to get range expansion, it'll be to the downside only. I have no real risk of this reversing here. So therefore, I'm not taking that trade that long. I'm not taking that long. Even though it's back at a level that I liked before, I'm done with that level. We've now trapped these sellers, and I'm bearish. So I don't care about this, right? Like this, I'm not worrying about that. I'm not going to buy this. I'm just going to leave this alone. I'm going to take that short. I'm going to be happy with that. And if I want to hold a runner, I would need to be able to leave my stop up here. So as small as those runners need to be, like if I took 10 here, I'm out 4, out 2 more, out 2 more maybe, and I got 2, that'd be okay, right? Because I don't mind holding 2 back to 30, but I'm not going to take 10 and sell 1 and sell 1 and sell 1 and then hold 7 and get it. No, that doesn't make sense, right? Like take the money, right? I'm not going to say the sure thing, but the probable outcome should be what pays you, and then the unlikely outcome where it just dives like it did today, like that can be the occasional like dessert, right? This, because when I see a big volume wave down like this, right? Oh, by the way, you can draw this here. So let me get rid of all these lines. This is something people complained about earlier. I said, "Oh, you're just looking at the ones that work." I'm like, "No, look, I'll show you the ones that don't, and you'll see." So, all right, wave to the low, new low, right? New low a day. We would need to get long. I would need a long signal to develop at 12.2, 92.75 or higher. We can't even trade to it. When we do, we get short signal, right? So the first purple diamond probably going to get trapped. When a second purple diamond occurs at the same exact spot, just get short again. That's especially when it's at that location. And you get paid, as much as you want, basically. Like it gets easier the more you do this. right? But the hardest part is the beginning of the day, planning, am I going to be more bearish, am I going to be more bullish, and then knowing what needs to change. For me, I'm thinking at this point, I know it's trending down. I know we did exactly what I expect, which is trade back up to retrace during New York lunch, and we're probably going to reverse. I got the signal to reverse right here, right? And the only thing that could make me bullish is to get a bullish signal above this, at or above that. When we don't get it, I'm bearish. So I'm just going to take every momentum trade I can, right? Now here, just like I said before, our last triangle was here. So am I taking profits as we go? Yeah, especially like this. I'm taking profits there. I'm not buying it. You know, we didn't get super exhausted. We're putting in way too much sell volume to buy this. See that? I'm not buying it. If you did buy it, your target's here or here, right? And of course, you do have this triangle that you might retrace. But I am taking profits as we go lower, right? As we break these lows, I'm taking profits here, and then here's another green line. I'll take profits if we break that too, right there. Right, so I'll take profits there. I'm not going to buy this. Not going to buy this. And that's hard for people to understand that, but it's got a star, and you said, you know, stars are entries. It's like, well, no, and I know, even though it's like, you know, you got the purple in the background going away, all of those things only apply to mean reversion conditions. These are not mean reversion conditions. We have trapped longs at the highs over New York lunch on a trend day down. Not long conditions. Do not buy. Right? And yeah, are you going to miss some scalps back to the midpoint? Sure. Like this one looks way better than this one. And it might come back up to the midpoint. I don't remember. But again, look at this wave. It's huge. Right? To really be bullish, we would need to break above that pink line. That did not happen yet. We can't even get to it, right? So in a mean reversion market, this works 70% of the time. When we're not in exhaustion, but we've got building momentum, it's going to work like 10% of the time, right? So like those 30% or whatever that it fails are these. This is when this doesn't work. Is when it's just straight down and there's no rotations to the upside, right? The hardest part about this is where do I get short? And the answer is you get short way back here. And then you add here. And then you wait for triangles and retracements, right? So you got a triangle there. They couldn't get to it. That's a clear sign you're very bearish. Now you got a triangle here in the same direction. So I would need a retracement to there and then a sell signal. And they just can't make it, right? So if you're not in the market here and it's getting you upset, you need to just get away, right? So here's your first real chance to get short, and you are under the radar, and you've been under the radar for a long time. That is dangerous. It's also divergent, and volume is getting really big. But note, we do not have exhaustion, right? But we are looking like they're trying to even out the momentum. So it's probably about to get exhausted. It's just not exhausted yet. It's not a buy, but I'm okay if this is an aggressive short. Right? Aggressive short. Very aggressive short. So I'm okay skipping that, even though it works great. If you have to be really aggressive to trade those momentum entries. And a lot of people just aren't aggressive enough to do it. But look how it's all purple here, right? Purple, 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 purple. They just can't break out of that pattern. So now, and look at this volume bar. This wave is just getting insanely high, right? It's not a reason to buy. Look, there's no exhaustion. It's just momentum. People are just giving up. It's going into no bid. So you don't buy this purple bar, green bar. You don't buy it. It's not going to work. You don't buy that. Even though this looks like it's finally starting to settle down, and it might come back to here, to the Voodoo range level. It might. Right? But I'm just going to skip it. It does. Cool. That makes sense. But the problem is to catch this, you need to take this and this. And so you'd lose 15, make 20. Like, why? When I can just be short from up here and maybe add one more time this green line and be done with it, right? Because there's just no more lows to break. So once you get this retrace, now we should expect neutral because we got this high, this power bar, this high got broken. Usually what follows is neutral. Note here though, you got exhaustion. See that? And it's to the opposite direction of where all the volume is. This happens all the time, you guys. And I know this is getting long, but like study this stuff, right? When you have a huge down day and they get one push back to the midpoint of what neutral would be, right? Like basically just a natural reaction. And yet the momentum indicators are saying that it's exhausted. Guess what? It's not ready. Right? It's not ready to go. And now, I mean, if you wanted to, you could, once again, you could draw the DVP. You could figure out that the volume of this whole move is like way back here and that we're nowhere near that. You can do it that way too, but you do not buy that. It is not ready, right? It may be ready to get neutral, but when you see this getting overextended, just wait, right? Wait until it can't get lower. Okay, so now we finally, right here, get a divergent low. See how it slightly makes a new low from this one? That is a divergent low. These are the best to draw these. Okay, our level is here. We need a star or a green bar at that level to the upside to get long. Oh, they get so damn close. It just doesn't. Wow. Does it? It's really close. Okay, the other thing you can do is you can, once it's down the up wave, you can do the same thing on the up wave because they also need to be above that. Oops. I didn't draw it right. Only the up wave. There we go. So that one is higher, right? So the aggression to the upside to get long needs to be above 105.75. Right there. That one is your first buy. The problem is where do you put your stop? Because you definitely don't want it anywhere. It would be normal to come back and test this volume build. So you can't put it below, above 9.6. And they might test the low, right? So technically it's a long. Where is your target? Here. Note for the first time we're finally seeing some pink background, which basically means we might be getting some neutral. It does not mean we're going to get a V reversal, right? And see why you don't want to put your stop right there? Right? It's got to go under this. Otherwise, you're going to have to get stopped out and get right back in again and hope to basically get paid back. Now, you do get paid back in this situation, right? You hit your target, it works. So that trade does work. It's just in the last 5 minutes of the day. So I didn't even draw that out. I wasn't going to take it. But not surprisingly, look what happened. You got exhausted again to the upside, right? Now we can look at volume. Volume was divergent. See that? Just for simplification, let's take some of these off. No. Okay. And now we're going to draw it again. And that one's at the low. Fuck. Right? It's way down here. So the only way we can short that is if they develop the low, in which case do you really want to short it? Probably not. So no, that's not a short. Yep. So they reject it. I'm not buying that. I mean, it got way too close to being exhausted here. It's probably okay, but I'm not doing it. It's just, it's neutral. They're gonna fuck with you. Yep. Back and forth, back and forth, back and forth. And that's where we're at now. So again, the low of the day is this one. This is the low, the wave to the low. That level did not get tested, right? We did the low, we got above it, they tried to back test it, and the 1209.650, and they could not. Usually, maybe not right away, but usually those get tested. So what do I expect to happen? I expect this to break that, right? When? Well, when we get a divergent upwave. So this was the high, right? We said the volume of that was down here. So that's going to be hard
It's not going to break it just right away, right? They're going to have to trap some buyers here to get these sellers free. So the buyers are trying to trap sellers. It's probably not going to work. It might, but usually you're going to get some action down here, right? If it's bullish, you're going to get this, right? That's what you expect. It's not going to be a V more likely than not. But usually what happens here is we get exhausted, which you saw here, with a divergent high. And then they chop everybody up, they trap them, and they just dump it. And then what I'd be looking for is a pullback back into this one based on this upwave, right? And then get lower. Now, real quick before I go, let's just take a look at the chart. I'm going to post these Voodoo range levels today. I apologize, I was on vacation. I did not have these before. I just want to show you how this is working with the midpoints. This is the 30-minute. So from way back when, here, let's just do like the 2 hour. Just want to show you here. So from way back when, we have this key area here at 12,195 from this range expansion that started this. I expected a reaction here. We did not get it, which likely means we are actually going to get back there and then maybe reject down, just a guess. But no, this one was really important too, and we haven't gotten that either. In other words, oh, I got to use the right charting platform. In other words, if I wanted to know where do I expect range to be, I'd say in here. Make it yellow. Okay, so this, if we're going to trade in a trading range, it's going to be between 12,055 and 12,195, if I had to guess. So where do I want to be active? I want to be shorting from here, and I want to be buying from probably down here, or at least here. But I'm not thrilled about buying this low, to be honest. Why? Because we made a slightly, see how this had a little bit of excess, and then they tried to come back to it but got stuck on a Voodoo range level and just ripped, right? Potentially trapping sellers at the lows. What that generally does is get a big reaction that then gets retraced. Generally, you get a very short-term reaction that then retraces. So it doesn't mean that this can't hold, but usually we would need to do this exact same thing on a higher fractal. So we did a fractal of that pattern. So if we go to a higher time frame, we would be looking for a divergent low. Here, let's go daily. I'm sorry, an excess low, not divergent low, an excess low. So where is our lows? So this low got broken down and closed below. That one can't count. We need a low that has not been closed below, but that we can test below and then trap. NQ, by the way, is 70 this week. Like I said, I'll share those today. Okay, so this could be the low that we test underneath and then trap. Technically, this low could be the one, right? Or else down here. Let's shift these lower and see if we have some confluence here. We do. I thought we might. Okay, so this low to this low is the primary buy location. If we can get back in there from 11,425 to 11,565, hard to imagine, but if we can get back in there and trap some sellers down there and then get a reaction, I'm not just gonna buy it, right? But if we get down here, we get a reaction on one of these lines, or we go just a little bit too far but can't close below it, those are the kind of things I want to buy in a swinger count, right? Other than that, I'm just unless we can somehow get like another extension here, which I kind of doubt is going to happen anytime soon, right? That might be like days from now. What's probably more likely is chop around in this range, which makes a ton of sense when you look at this. Like I said, I don't know if this pattern is right. They might have to go higher first. The last thing I'll leave you with is the higher time frame on the algo, and what you'll see on the 80 tick is that we have traded way down from that pink bar, orange bar star that I showed you. That was a amazing entry for a swing trade, right? And these longs are not getting beyond this, and then it's only purple. What does that mean? Bearish, right? We got super extended here. See that? Super, super extended, right? But volume just keeps going higher. Now this volume was divergent, right? So if you want, now that we've appears we have finished this wave, we have. So we can now draw this DVP from this low, this high to this low, and we get a very important level, 12,209. Okay, I'm going to make this a different color on my chart because if we can get a buyer to aggressively act there at 12,209, we could potentially get a reversion. The problem is that 12,195 is the level where I expect a reversal back to the downside. So what will probably happen is we trade up to that level and get a short signal to bring it back down. But what might happen if this was overdone, right, which I doubt, especially with a diamond here, usually these get trapped back in. There's also a purple pivot here. Just doesn't make a lot of sense just to turn on a dime and keep going. But V reversals do happen, but they're very unusual. But what could happen is we come back up here, we get a little bit higher than 12,209, we come back into it and get a sign of aggression back up. That would be a potential long. The problem is that this area is going to want to get tested, so it probably wouldn't last. So maybe it brings you back up to this level here. You can see that we got a really nice reaction off that voodoo range level, 12,335, right? So there are stops up here, right? This was a previous POC. So is this. So there are definitely stops up here. So if they can rip it higher in the next couple days, it does make sense. But what I'm thinking they're going to do is come up here, try to get above 12,209, fail, and go lower first, right? I don't really see a great reason to be bullish other than the fact that we're just really extended to the downside, and we did have a ton of volume at the lows and then a divergent low, right, on volume. So if we can get above this 12,335 and take those stops and we don't see an immediate rejection, then we can talk about maybe being in a neutral to bullish situation. But for now, I'm going to assume that this retrace gets us back to the midpoint only, if not just the lower blue, because of the fact that we're trading under the range of the radar. So I hope this has been helpful, you guys. I'm going to step out here because this has been kind of long. But yeah, if it didn't make any sense, maybe watch it again on like 2x time and see if now that you've like seen what, now you get a feel for what you're looking for, it might make a little more sense in the beginning. And see if during the last 10 minutes, if you can kind of notice some of these things developing that we just talked about, because I think it is really helpful to have some sort of system where it can be visual and objective. And if you don't have that, consider joining us in the Trade and Perform room. If you do trade in the Trade and Perform room and you want my algo, let me know on Slack. If you're not in the Trade and Perform room, this algo will not work on your Sierra chart because you need Simon's algo to make my algo work. So if you just are happy trading Simon's algo, cool. If you want to know more about Simon's algo, which looks like this and is quite a bit simpler than mine, then email Simon at trade_perform@gmail.com. Otherwise, you can always find me on Twitter